What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is February 25th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I not only want to spend some time to dive through some data science models to try to get an understanding of where we are in the current cycle and where we're heading over the next few months, but along with that as well, diving through some important news pieces in the cryptocurrency space, and then we'll end it off by taking a look through our partner Clio and diving in a bit more to the platform. All right, so we've got a lot of things to discuss throughout the video right after our quick sponsor. Our sponsor for today's episode is Ledn.io. For those of you out there holding Bitcoin long-term like myself, why not put it to work? Ledn has a suite of services to help you save, earn, and hodl more Bitcoin. Their B2X loan service lets you double the amount of Bitcoin you own through a Bitcoin-backed loan. Their savings account lets you earn interest on your Bitcoin, paid out in Bitcoin, so you can grow your holdings over time. And with their Bitcoin-backed loans, they let you access cash in a tax-efficient manner while keeping your Bitcoin under insured custody with BitGo and real-time proof of reserves. Get a 250,000 Satoshi bonus if you register with the link below and get a loan today. Alrighty, everyone, so let's go ahead and start by taking a look across the board on the market. As we can see here, not only between Bitcoin, Ethereum, and XRP, as well as other large players in the space, we can see the vast majority of the cryptocurrency market is down at the moment. Again, this is continuing the correction that we've seen over the last 3 weeks in the sense of cryptocurrency markets, fading off some of the gains we've had over the last 2 months where we had really strong price action, not only in Bitcoin, but a wide range of altcoins as well. Now, I want to go ahead and just kind of cut out the noise, dive right into the data science models, but we're going to be using a website, as you guys might know if you watch the channel frequently, and that is lookintobitcoin.com. Now, I want to make sure it's very clear, this is not only a free website, but because it's free, I want to go ahead and say that you guys should support the site. They have made a ton of data science models free of charge for people to utilize that used to be available to a select few or very difficult to find on the web, at least ones that were up to date and that would keep up to date with price action. So I highly recommend you guys take a dive through the website and scan through some of these awesome data science models. They're always adding new ones from time to time. But in today's video, we're going to be using 2 of them. But again, I want to say you should support the site if you guys can. They do take BTC donations. But let's go ahead and talk a little bit about 2 of the models that I really like. So the stock to flow model, probably well known by a lot of you out there, but for those of you who don't know the stock to flow model, it's not a big deal. The stock to flow model is basically a measurement over time that not only accounts for what the price should roughly be on a fundamental basis in regards to the new input of new Bitcoin into the supply. So this is taking into account every 4 years the halving event that comes through on Bitcoin's supply schedule, which reduces the amount of new Bitcoin issued every 10 minutes. But along with that, it's also factoring in price here as well and how it correlates above that. So we've got basically a variance here, from the bottom to the top here along this line of where price is in relation to this line that's increasing over time with these big leaps. So we can see here that we're getting very close to a halving event here sometime in May of 2020. And that's going to lead this line to start increasing quite rapidly going into 2021. Now, again, the thing that I've always emphasized here is to look at history and see how price, again, correlates around that line. Well, again, the last halving event here was when we had a very underdeveloped market, when Bitcoin's price was going from, around $11 upward towards $230, a pretty parabolic rise in a matter of really only about a year in this case, if not less. So the halving event back here, though I think it is valuable, at the same time, is probably not going to be as valuable in the sense of getting input data from what we got in the last halving event. Now, how do you know when the halving event is? Well, not only do we have these general kind of increases on the line here, but along with that, we've also got the days until the next halving. So if we're getting into this kind of purplish shade here, as we can see here and over here, we know that we're just a couple of days away or just a couple of weeks away from the halving event, roughly speaking. We can see here, interestingly enough, as we transition over to this orange color, that's when we strike on the next halving event. We can see here that on the last cycle, we actually got a decent little bump up where we went up from nearly about $500 per Bitcoin up to $750, $760, give or take. So basically a 50% increase in price. And that's a really nice run up. That's something to note here, 50% bump. And then what happened afterwards was a correction back down to the line. We actually stayed below the stock to flow. So we can see here we had a decline down here in the model variance. And then we played catch up here in July of 2017 all the way up to December of 2017. That's when we really started to get the parabolic rise and catch up to a fair value and actually blow past a fair value for Bitcoin, right? So we can see here again, basically the stock to flow showcases us that the halving has this huge supply shock on price, inevitably speaking, at the end. Because what happens is there's usually a little bit of hype coming in, some people who know about the halving event coming up. It's a small niche group of people who are trading this market who buy in preparation. And then what happens is usually the buyers fade out because the halving event happens, price comes down. And then what happens is that supply shock causes a long-term effect on the balance between supply and demand. Right? So we've talked about this on the channel. It's basically how the halving can't really be priced in until the day it comes, because when miners are mining Bitcoin, they instantly sell it on the market. Like 95% do. Guys, I know there's some people who believe that they hold it. Maybe if you and I could mine Bitcoin, we would be holding it. Most miners do not. It is a business. It's just like people who mine for gold. If they might be preaching gold, but at the end of the day, they're looking to sell it and they're looking to make a margin on it. It's the same exact thing with Bitcoin. So what happens is you go from about 1,800 Bitcoin down to 900 Bitcoin being sold at the same market price. So if you had, for example, an equal amount of buyers and sellers, 1,800 Bitcoin worth of buy side pressure and 1,800 worth of Bitcoin sell side pressure from miners, and that's just the miners itself, so they have to keep up with the miners even to maintain price. And then there might be sellers on top of that who want to sell their positions in Bitcoin. But let's just say, give or take, that price is staying the same and the buy side and sell side pressure is neutral. Well, let's say that the majority of that 1,800, of course, is miners, so it goes down to 900 now, because they're now only producing 900 Bitcoin per day. Well, you now have a 900 Bitcoin set of demand, which is mean that they're going to start pushing up price. And that pressure becomes more and more relevant here because it starts to have a reflection on price. And as price goes up, more people want to buy Bitcoin, and it spawns these parabolic cycles that we've seen both times with the halving event. It is programmed in to do this. It's a very cyclical asset, okay? So I know I rambled on, guys. Sorry, you probably heard me mention that point before. But I think we're going to have something very similar to this. We're already getting that purple front run here where price is rising up here. And I think, from the line here, right? Again, the thing you can take note of here is that the line's value here was around 500, but we went up to around 750. Again, 50% increase. If we take a look at the line here, we're riding up here towards the halving of around 8,000. And I think something that's very reasonable would be for us to do, and again, another 50% increase over the fair value of the stock to flow model, which would be 12,000. And this is something that I stressed on my channel the other day. I really do believe what we're going to see here is, again, we might come down to test this line of support here that Bitcoin has been holding for a long time on the logarithmic chart. But give or take whatever it is, I think by May, we're going to come up here and test towards 12,000. I think it's a very reasonable level to reach. And again, it's something that is about 50% above the fair value right up until the actual halving event where we start rising in the sense of the value. Now, the other data science model I want to take a look at as well is the HODL wave. So this is the 1 year HODL wave. Basically, this is the 1 year HODL wave model that basically takes into account the amount of unspent transaction outputs on the Bitcoin network, or basically transactions that have yet to be utilized in over a year. So this means that this is Bitcoin that has not moved in any way, shape, or form from another exchange to one another, from personal wallet, whatever it may be, and it is sitting there in that wallet. So the higher we see these lows go and the higher the highs go, this means that people are not moving their Bitcoin around as much, that they're likely holding on to it. It's a higher likelihood in this case, because if they're not moving it around from exchange to exchange, other platforms to platforms, then in that case you can have a little more reassurance that they're actually holding it. Now, it is important to understand the one thing we can't take into account is whether or not someone has made a deposit onto an exchange and it just hasn't moved, right? And they might be using it to trade on exchanges, whatever it may be. But we can tend to see when people are actually really increasing their long-term investing or trading, and I'll explain that through the chart here. So not only is it significant to note here that we have higher lows and higher highs, but we can actually get a little bit of a story here from the HODL waves. So let's just go ahead and understand, from example, the last cycle gives us a really clear picture. So we can see here that as markets bottom, we actually tend to see that the 1 year HODL wave starts to increase in this case. That's the exact same thing here. We saw an increase over here in the towards 2018, towards the bottom of the market in December of 2018, where we had our full 80% retracement like we had back here. And we tend to find that the reason why price is starting to hold here is that people are starting to hold on to their Bitcoin. The sell side pressure is waning away. Bitcoins aren't moving. Because of that, we start to see an increase here. And over time, as this starts to increase, it applies pressure here. It means that, hey, roughly about 60% of Bitcoins haven't moved. So you're going to have a much harder time, even again, though some of those may be on exchange. It means that a lot of people aren't moving around their Bitcoin from exchanges to their wallets. People are holding on to it. Many of them are keeping them in cold storage solutions, off exchange and off hot wallet solutions. So they're holding on to it for safekeeping for a long time. And as price starts to increase, we're starting not only with the halving event, do we mix that in with the HODL wave? It starts to apply, again, a lot of pressure on the demand side that there's not much supply, right? There's not much supply to keep up with the growing demand, so price starts to increase. And what happens is the demand starts to accelerate faster and faster and faster, much like we saw over here. And then what happens over time is people start taking profits, they start selling, but the demand side you just can't keep up with, right? There might be supply a little bit more time to time, but the demand is growing stronger and stronger. And price shows us this. There's no debating it. If the price is going up and accelerating like this, it means that the demand is heavily outweighing the supply side. Even though this might be increasing, demand is rising up even faster. So again, the price is a good illustration of this. But we start to see here that as we continue to steadily decline here in the HODL wave, this is when we start to get fearful in markets. This is when we should start to get a little more cautious. And at the same time as well, look for opportunities. I know in that kind of sense of being cautious, this might sound a little bit counterproductive, but looking to expose ourselves to some of the other assets, in this case, altcoins, as we start to go down this line. But I would say towards this area, this is where we want to actually start taking profits. When we start to get very low here and start to kind of flatten out, right? This is where we need to be concerned. But back here again, when we start to get these initial stages of decline, this is where we can look at altcoins. This is where we can start taking risk. This is the fun period, right? This is when markets are excited, where demand is heavily outweighing supply. Again, the further you get down this line though, right, we don't know when the market's going to top the next time. There is no specific magic number here. It's the momentum of the line here, right? The more and more it starts to flatten out or start to stagnate, that is when we should start considering that, hey, the cycle might be over. And you can usually tell between a combination of this data science model and the countless other ones that are out there, as well as just taking a look at price. You should be able to tell, roughly speaking, if things are getting a little overinflated. So anyways, this is my target range here for the next couple of days. I'm watching for this here. For the next couple of weeks up into May, where I think we're going to hit 12,000, somewhere in between here. And then again, after that, we might be able to get a breakout right away, or we might pull back inward and then leave up as we did last time. But again, who knows? It could change around a little bit. But that's just my general analysis on those few data science models I wanted to talk about. Now, next up, I want to talk about a few other key things here. First off, in the sense of fundamental developments, Caitlin Long is starting the first ever crypto native bank out of Wyoming. And this has actually been probably one of the most necessary things for a lot of cryptocurrency startups, because as much as we talk trash about banks, we do need banks of some sort in many cases for businesses and things of that sort for the cryptocurrency space. So this is actually going to be a really interesting play. They've called it Avanti Financial Group. I hope I'm pronouncing it right. But basically speaking, she talks a little bit about it on Twitter here, and I'll go ahead and pull up the actual tweet so we can dive through it a little bit. But I think this is really awesome. Caitlin Long is a wonderful person. She's been leading the way in Wyoming in the sense of actually bringing about not only crypto adoption, but also just providing an actual framework for cryptocurrencies to operate. So she just released this in the last 22 hours. So it says, introducing Avanti Bank, a new U.S. bank to serve the digital asset industry, offering new products and SVCS not currently available in U.S. markets, along with tech partner Blockstream. So they're working with one of the biggest Bitcoin companies. Wyoming-based, we're preparing a long process of charter application and aim to open early 2021. So this is a ways out, but it is really awesome to see that Caitlin's doing this. Again, I think in not only a pro crypto state like Wyoming, this is a good place to be based, but along with that as well, again, you can start to dive in a little bit deeper into the details of what kind of services they'll be able to offer and what this really means. I think it's very similar in this case to the kind of legislation we had out of Germany for banks being able to hold deposits of cryptocurrencies. these slow but steady steps are going to make it much easier for crypto to not only get out into much larger markets and a lot of hands out there that can't get access to crypto, but it's also going to help build a foundation for businesses out there to do a lot of things that they just can't do with other traditional commercial banks who don't want to work with the cryptocurrency industry, plain and simple. Outside of that as well, I just wanted to share as well, I'm going to be speaking, as you guys probably might know, I'm going to be speaking in Istanbul at the Istanbul Blockchain Week. And it's really exciting to see. It seems like Turkey right now has been really picking up steam. The conference that's coming up is really looking exciting. But with the huge depreciation in currency in this case, I'm starting to notice that Turkey is getting more and more user adoption. In fact, a lot of people don't know, if we're talking about real world adoption and people who really care about this space, Turkey is number one, especially when it comes to its youth. There's like over, I think it's 25 or 30% of the youth have used cryptocurrencies and like real world transactions. So it's fascinating. Like, this is really huge stuff in regards to Turkey. So I would recommend looking into it. But I just wanted to mention again, Turkey's a hotbed here to watch. And then outside of that as well, I think some people were asking me what my thoughts were on the comments from Warren Buffett. So Warren Buffett finally had his meeting with Justin Sun a while back, and then he got interviewed on CNBC. And he had talked about a little bit in detail about what his reaction was, and he said nice things about Justin and everyone, and he wanted to thank them for their donation to the Glide Foundation, which is how Justin was able to get this dinner with Warren Buffett. But the thing to take away from this, though, at the end of the day, is that Warren still not only speaks quite negatively about cryptocurrencies, but he actually lied and said that he didn't own any cryptocurrencies, even though Justin had actually given him, or you can say what you want about Justin, I'm not here to talk about that. I'm here to talk about the fact that he actually lied because Justin gave him free crypto. So Justin actually came out in this article and said that, well, you can actually prove it through the blockchain that he actually gave a gift to Warren Buffett. In this case, he gave him a little bit of Bitcoin and a little bit of Tron as well. So of course he's going to be pushing his own crypto there. But again, just gave it out of free will in this case, and again, tweeted about this after the interview and stuff, as Warren Buffett said he didn't own any crypto and he never will. And I think Warren was probably saying this because he doesn't want it to be where, I get this. I think Warren understands it himself more than anyone, and it's basically where, for example, if he said, yeah, I own a little bit of this Bitcoin because Justin gave it to me. It's going to give a whole new status to Bitcoin because Warren Buffett, you're going to see in the headlines, Warren Buffett now owns Bitcoin. Everyone flips out and stuff, and he knows that CNBC and all these major media outlets would do that. So I don't give him too much criticism, right? I get it. But the major point here I want to say in all of this is that don't let one single investor like Warren Buffett, who is more of an old school investor, discourage you from looking at new asset classes. Just because he says that it doesn't provide a yield, it doesn't mean it's not valuable. Gold doesn't provide a yield. Silver doesn't provide a yield. A variety of bonds across the world are providing a negative yield. I mean, there's a lot of things in this world that aren't providing a yield of some sort that are valuable, because they can either provide the utility of storing value, transmitting value, or just providing a way to put away wealth that's outside of a system that's correlated with other worldly factors, in this case, like the economy or geopolitical stances. It's important to understand that it's not always good to be in properties or good to be in stocks, because, for example, I'll give you a good example here, right? There's businesses, there's stocks traded even as well, that lose money like crazy or aren't making any money, might be breaking even, and they still go up a 10x in value. Tesla is a great example in the sense of a company that just turned profitable and is trading at a crazy multiple. How is it fundamentally worth $150 billion or $140, whatever it was? It's not. It's not that valuable. As much as I love Tesla to death, I think it's a cool company. The issue with Warren Buffett here is that he is very focused on doing things on a very fundamental and rational basis. But markets aren't always fundamental and they aren't always rational, and value is completely subjective. So anyways, just want to make that point here, guys. Again, it's always important to know that when people like Warren Buffett are coming out and talking about, financial markets and talking about new asset classes like Bitcoin, he's never been really prone to understanding new technologies, and that's fine. He comes from a different time, right? But anyways, I wanted to spend a little bit of time real quick, guys, to dive in through Clio. We were talking about this kind of preparation for coming up on, this halving event here, which is not only going to provide probably some good opportunities before the halving event, so over the next few months, but also into the next cycle. So we want to kind of come prepared for that. Well, we've not only driven through a lot of really interesting features on the Clio platform, but I want to spend a little bit of time to talk about paper trading strategies, because I think for a lot of people, when you're doing automated trading strategies, one of the biggest things that people are worried about is they're worried about deploying something on their actual account, in this case, that's trading with real funds, that's going to end up losing a lot of money in this case, or if something goes wrong, you have to worry about edge scenarios with your trading strategies. So one of the ones that I wanted to talk about is the really cool feature of paper trading. Now, this is my account here. Now, what's really nice about the paper trading section is it's actually very simple, and there's a lot of interesting features that you should be aware of in the sense of paper trading. So for those of you who may not know what paper trading is where you can, for example, place trades of some sort, or in this case, place a strategy that is going to automate trades that don't actually trade with real money. It trades with paper money in this case. It's basically giving yourself a general balance in your portfolio of a fake amount of money and trading as if it were real money, and seeing whether or not you have a profitable trading strategy or a trading strategy that puts you in the negative, where you might have to rework out your strategy. So now that we understand that basic concept, if we take a look here through the platform, we can see that we currently have 2 strategies deployed. This is something I want to emphasize. You can deploy a wide range of paper trading strategies. Now, from my understanding as well, as you go through and use the platform, there are some restrictions on the free plan, but what's nice is you can deploy more than one in this case and get a feel for the platform, which is really nice. So you have the free paper trading strategy, which we can see a profit of here. We can see the time frame, the risk score, and also you can see if it's been back tested. But we can see here as well the yearly return. And there's a few other key things we can dive into. First off, I want to talk about open positions. So this will show us where we're currently open between our paper trading strategies. We can see if they're at a profit. Right now, none of our 3 positions are at a profit. Crypto markets have been down a little bit over the last few days. So our strategies, again, should account for these kind of anomalies in markets, but luckily these are not final closed positions. These are current positions. So they'll get stopped out if they go to our levels where we have stops set, and along with that as well, if they keep going up to certain profit-taking levels, they'll be closed. Again, that's all part of the automated strategy here. So again, very important thing to take into note. We can see the big combined return here for our net profit on paper trading strategies, and also our percentage of profitable positions. And so far, all of the ones that we've closed have been profitable. So we have 100%. Now, another thing to take note of is the action tab over here. Very important. It can be easily missed by some people if you're just focusing on the big numbers here. First off, you can dive into the details of each strategy in this case. So this will take you into the details of that given strategy. You can go through, you look at the rules, for example, for that given strategy, and you can look through the backtesting results. Again, all there available for you to take a look at. Along with that as well, we can also set notifications. So these notifications can be on-screen alerts, on-screen pop-ups, or emails about an open position, a closed position, a liquidation. This is very similar for those of you who maybe use TradingView, setting alerts of some sort to notify you about, hey, my trading bot has basically set a position on BTC USDT, right? So I've opened up a Bitcoin trade in this case, or maybe I closed a Bitcoin trade. And there's all these different formats, and you can set a good range of notifications. You can deploy this real time on your account, which we will talk about at a later time frame, where we're going to connect one of our exchange accounts, and then from there be able to actually go about placing a trade. And then outside of that as well, we can also stop a paper trading strategy. So let's say, for example, I wanted to stop this one here. Just go ahead and click stop, and it stops like that. So again, even though it's paper trading, it's good to practice that, because in the case of actually deploying one of these strategies, if something starts to go really wrong and you're getting a lot of notifications, you want to know how to be able to stop it just like that. And then if you want to restart it, click start, and it's right back in action. So again, thought this would be really interesting to share with you guys. Again, another way where you guys can get your feet wet, not only through back testing and customized strategies or using some of the pre-built ones in the platform, but also being able to deploy through paper trading and just getting a feel and seeing the performance over time. All right. So anyways, that's it for the video, guys. Thank you all so much for watching. If you like this one, drop a like. And if you have a comment on anything that we talked about, please feel free to leave it down in the comments down below. I'd love to hear from you guys. Hope you all are having a great Tuesday wherever you are. And until the next video, I'll see you all in the next one. Stay tuned.